Well, greetings, everybody. I'm very pleased to get the long-suffering, the long-suffering man again. Here he is, ALASDAIR, and it's great to see you. I'm after your expertise this time round on things that have manifested themselves in more recent times. And we both know that gold has been a preservation of wealth for about 5,000 years in some form. But there are things now that are moving around which are so modern. When I say modern, I would argue post 1970, perhaps. The concept of paper gold and all the rest of it and other things. Some of which I don't understand myself, I'll be brutally frank. And I've asked ALASDAIR to come on again today and talk about it. And the one thing is, in particular, is Tether. I happen to notice from my research that the institution or company, call it what you like, of Tether is buying now gold on an industrial scale. It's as big as the central banks, the international central banks. It's up there with them. It's up there with sort of Poland and places who are internationally increasing their reserves of gold. And I have listened to an explanation of it one or two times, and it's a bit like the jet engine with me. I've listened a couple of times, and I think I'm almost there, but I'm really not quite. So, dear boy, take it away. Tell us all about it, because I know you understand it.
Yeah, I think this has become a lot more of a topic since President Trump took office. It's quite clear that he likes cryptocurrencies. The first thing he did was he launched a number of cryptocurrencies in his name, his wife's name, and all the rest of it. Basically, they've all failed. But, I think he likes the money-making opportunity of cryptocurrencies. And this has coincided, if you like, with regulatory concerns about, in particular, the cryptocurrency market being unregulated, beyond the reach, if you like, of US regulators. So it's all sort of tied up with that. Now, Tether basically produces what's known as a stable coin. In the bad old days, when banks refused, obviously under pressure from their regulators, to deal with cryptocurrencies at all, the whole thing went offshore. And of course, you couldn't use, if you like, your bank deposit account to go and buy Bitcoin or whatever it was that you wanted to buy. Instead, you could fund a position, but then your trading would happen through a stable coin, not by changes in your bank account. This is the key thing to it. So how do they work? Well, effectively, Tether, which is the main provider of the world's stable coins, runs almost like an old-fashioned bank of deposits. Now, we're going back to Bank of Amsterdam, whatever, It's a concept, actually, which really hardly exists today. And so they've if you like, resuscitated it. Just imagine if you're going to have a liability, which is what a stable coin is, to you as the issuer. Now, that stable coin can be encashed at any moment. So you have got to have the backing for that stable coin in order to meet any redemptions of stable coins. And the way they handle this effectively is, if you look at the balance sheet, on the one side, you've got the liabilities, stable coins out. And on the other side, you will have the assets. Now, the assets basically have to be extremely liquid. Now, in the case of a dollar stable coin, what you do, if you're just having absolutely no risk whatsoever, is you merely go and buy 1 month's treasuries, 2 months' treasuries, 3 months' treasuries maybe. Now, they're currently yielding about 4% in round terms. What do you pay, if you like, to the holder of a stable coin? 0. So for every stable coin you issue, you're making a gross interest return of 4%. Now, you're not using your own capital in this. This is a great thing. So, you can have, if you like, your stable coin, or the issuer of the stable coin might have capital, let us say, of $1 million. And with this degree of liquidity, you can easily run positions in billions. And if you're taking 4% gross out of each stable coin, it's an extremely profitable operation at the if you like, the shareholders level. The returns to the shareholders, it's just 4% times whatever your leverage is. And because stablecoins come and go very easily, because the US Treasury market, particularly the short-term treasuries, are extremely liquid, you have no problem whatsoever. Now, not so long ago, the Americans passed something which was, the acronym was the Genius Act. And this basically means that from early next year, from January next year, I think, all this stuff will be regulated. And the reason that the US Treasury likes it is that obviously if there is an expansion in stable coins, then there's more short-term funding for the US Treasury. So what's not to like from Besson's point of view? The regulators like it because it brings something onshore. The banking system doesn't mind too much because once Tether and the stablecoin issuers comply, if you like, with all the money laundering stuff and so on and so on and so on, that keeps them happy. I mean, it's a perfectly natural thing to do. So that's actually why these stablecoins exist. Now, the fascinating question is, why is it that Tether, which is making trillions out of this very, very simple process, being a bank of deposit as opposed to a normal commercial bank which lends loans into existence, this is less lending deposits into existence. Why does it run around and buy 130, 140 tons of gold? Now, we don't really have an answer to that, but I think we can guess. I am told, now I haven't met anybody from Tether, but I know someone who has met people from Tether. So this is very much second-hand anecdote, if you like. They seem to like gold. Well, it's obvious from their purchases that is true. But, I mean, if I was in their position and if I had just a little bit of a smattering of the problems that governments face in terms of expanding their money supply, which after all was the whole foundation of the Bitcoin phenomenon, then I would think, well, hold on, now Bitcoin is fine, but it does actually make sense to have a foot in the traditional camp, which is gold is money. Bitcoin, we think, might be money. I'm not going to get into that argument. But you can see from their point of view, in terms of looking towards the future, when perhaps fiat currencies no longer exist. If fiat currencies no longer exist, then their stable coins go down with them. So what do? Do they just fill their boots with Bitcoin? Well, there's not enough of a market there, really. It's a fairly thin market. I mean, not a lot of purchases can move it quite sharply. But gold is a far larger market and a far more interesting market, and it's got the history and all the rest of it. So if fiat currencies disappear, then our business, I'm talking about, as a principle behind Tether, our business has got to move on to something else. Now, what if Chinese are moving into gold? Well, perhaps that's a model we ought to look at. So you can begin to see there is some rationale here. Now, the problem for them, obviously, is they can't work it on quite the same basis. Because if you issue a stable coin with zero interest, you're going to back it with an asset or proportionately with an asset, which again yields virtually nothing. So your bank of deposit model effectively is destroyed by this. But you can see that from a strategic point of view, it does make an awful lot of sense for Tether to move into gold, if you like, to form the basis of a future business, given that the business that they are in, everybody knows within the cryptocurrency sphere that the whole basis of cryptocurrencies is that they will somehow replace the failing fiat currency system. We don't know how. I'm sure they've had their lawyers look at the status. Now, I can tell you that the legal status of Bitcoin is virtually zero. And there are also other problems with it. And that is that in the past, and presumably today as well, but particularly in the past, while it was very unregulated, of course, it was a mechanism for thieves, for money launderers, for tax evaders, and all the rest of it to hide their ill-gotten gains. Now, the point about the blockchain is that, yeah, it gives you huge security. I mean, you know that you possess it if you've actually got it in your wallet, your Bitcoin wallet, as opposed to having it, if you like, on some sort of platform. So if you possess it, that's fine. But under the laws, and this really applies everywhere, I mean, you could get caught because if, let us say, your government finds that the Bitcoin you own was in the past bought by someone as the proceeds of crime or from the proceeds of crime, then that Bitcoin, the state could argue is not yours. I mean, on the same basis that artwork stolen by the Nazis from Jewish families are returned to those families where they are identified as the original owners without compensation. Now, I think that it's not a clear-cut issue, this, but we're going back to some very, very basic law. So you can see that from Tether's point of view, if they have taken legal advice, there are a number of questions over using, say, Bitcoin as a future form of money. And that is before we address the practical problem of understanding the role of credit in an economy. A business doesn't go and borrow gold in order to, I mean, under a gold standard, doesn't go and borrow gold in order to build a factory. No, it borrows credit whose value is tied to gold. That was the whole point. Now, we're talking about a post-fiat currency world. In a post-fiat currency world, who is going to go and buy credit attached to Bitcoin in order to build a factory? Well, nobody in their right mind is going to do it because they've got no idea what the value of the eventual repayment of the loan is going to be. I mean, it's just a highly volatile, horrible thing. You can't finance anything out of Bitcoin. So you can see that if you actually think this thing through, the whole of the crypto coin industry actually is, in the context of time, ephemeral. It's not going to last. And I personally think it won't even, it will probably die with the with the fiat currencies. So coming back to Tether, I don't know for certain that they're thinking this way, but if they're looking at a post-crypto world, then what they're doing makes an awful lot of sense, even if they don't use it as a basis of a future currency where the units being issued by Tether effectively act as a gold substitute. But at least what will have happened is that the owners of Tether will have secured the value of their enterprise by getting out of credit and getting into gold. And I think that's probably the most important point behind it.
So would I be right in taking from that? Thank you for that. I think I understand it now.
Good.
It seems to me, therefore, and am I being oversimplistic, the people who benefit most out of the whole expedition on this is your shareholders in Tether, or am I missing something?
No, you did right. You're absolutely right. A completely different context. I remember there was a debate in the city back in, I think it was in the late 70s, early 80s, about regulating, sort of betting. And we're talking about, betting on indices and stocks and all the rest of it. And I had lunch with one of the principals of these betting shops. And I said, I sort of took the naive view that, why get regulated? It's all a pain in the backside and you really don't want to have all this. He said, no. We get regulated. I mean, it's going to be fantastic for business. And that's the whole point about it. So from Tether's point of view, this regulation is manna from heaven. I mean, big time. It legitimizes what they're doing as far as the establishment is concerned. And I mean, if you really look at the, if you sit down and start thinking about the future as an owner of this business, I think the conclusion you would come to, particularly having taken proper legal advice, is that, we've got, this is just fantastic. We're going to make an awful lot of money, assuming, of course, that the expansion of the cryptocurrency industry leads to more demand for our units, which I don't think is really going to happen. But it does mean that, this is a situation we've made a lot of money. We're still making a lot of money. We're legitimized. Now we need to stash something aside for ourselves. And I think that's probably what they're doing with gold.
That's most useful. Is Tether on the stock exchange in the United States, or is it on no?
No, I haven't actually looked at that. I don't believe it is. There's no need for them to raise money. I mean, why give any of it away? I seem to remember the early days. I don't know whether this has changed. They were based in somewhere like Bermuda or Bahamas, and their bank was a sort of some small bank which nobody ever heard of, but it, and they were doing this huge, great business. And there was this sort of small bank, if you like, which was in the epicenter of it, and everybody thinking, "Oh God, this is risky," and all the rest of it, without actually understanding what the model was. There were lots and lots of stories at the time that they were investing in Bitcoin and all the rest of it, and that may indeed be true because you'll know, from a pure banking point of view, you don't need to have all your liquidity up front. You know that in normal times, and this is a figure you may not know, but in normal times, a bank would expect no more than 1/36 of its deposits to alter, out or in. So basically, you don't need to hold as much as 5% of your deposits in liquidity. So what do you do with the rest? The other 95%? Well, you can go and play with it if you want. But I mean, you've got to do it in such a way that it doesn't undermine the credibility of the business. Because if you do that, the 1/36 ratio no longer applies. So you can see that you've got to conduct yourself in such a way that you retain your credibility. And I think that they learned very quickly that this is what the lesson was. I mean, they may have been dealing in Bitcoin, and I'm sure if they did, that it was extremely profitable because they could manipulate the price, But those days, I think, are long gone. I mean, Bitcoin is now in a bear market, arguably. It doesn't have any legal status. If anything, the people who are keen on Bitcoin are the same people keen on the sort of high-flying tech stocks. I mean, it correlates pretty nicely with tech indices. The sort of the Magnificent Seven. I think one of the media outlets in America does an index of the Mag 7, and you plot that and you plot Bitcoin, and it's been following it quite closely, and it's still doing that. So you can see that that's where, if you like, the interest in Bitcoin lies. And all this stuff about it being future money and all the rest of it is just, I mean, it ignores the law. I'm talking about common law, which is common to all of us, and it ignores an understanding of credit, whose value has got to be as stable as possible. And if credit fluctuates, it's absolutely no use whatsoever. I mean, unless it's unless the fluctuations are continually going down, in which case what you're doing is you're robbing depositors to pay borrowers. That's a slightly different situation. Bitcoin is designed to do precisely the opposite. So, from Tether's point of view, I think I'd be doing exactly what they're doing.
Just for my subscribers watching this might explain. I know I've had a lot of emails on this. That 1/36 game is very interesting because that is why when you go in to your bank and say that you want to buy £50,000 worth of sovereigns or something like that, they will do absolutely everything to stop you taking that money because it comes out of the system. It's off the table. And that's what banks don't like. And interestingly enough, the other day, a lady of 70, in her 70s, actually wrote to me and said that she had Hong Kong and Shanghai Bank. She wanted to buy some gold. She's a subscriber of mine and looks at my website. So she wanted to buy some gold. And the Hong Kong and Shanghai Bank got their fraud department to contact her. It didn't stop there. She was in communication with them for weeks and weeks, and then a policeman turned up. Policeman turned up at her door. This woman's in her early 70s. A WPC, can't call them that now. But anyway, policeman who was a woman, I don't know, or probably a woman, who knows. So this is the fantastic, and this policewoman, bless her, didn't know why she was there. And this is going all the time. They don't mind if you give it to another bank to do something that banking organization likes, But of course, if you're taking it off the table to put into gold somewhere else, maybe abroad, maybe in Zurich or something, that's the reason they don't like it. Just as a word in there, the advice is all on my website there. Don't stick to your guns. You're up against a bank clerk who's being supervised by another senior bank clerk. Stick to your guns. They'll have to give you your money sooner or later. I know it can be traumatic for you, but stick to your guns. They will have to part with your dough sooner or later. So stick with it. Now, to a matter of regulation, it reminded me of, I suppose, it's banned in Boston. Banned in Boston. If you wanted to sell your book, make sure it was banned in Boston, because the regulators they would ban it in Boston. And of course, everybody, like Lady Chatterley's lover, that marks out my age a bit. Everybody wanted a copy, especially me in the fifth form at school, wanted a copy of this BC book, which was rubbish, incidentally, because it was banned. And so this is the fascinating situation we have. And so if the regulation establishes it in some form across the board, yes, it attracts people, because that little thing in the market we were in the city, of course, that regulated by whomsoever it was, different over both our careers. It was a permanent, whatever they call them, financial authority. So people would look at that at the bottom and they thought that meant something. They thought that meant something. They didn't realize that everybody had got together behind the scenes who was actually in the game to mean that once you passed your regulatory inspection, you could rook everybody mad. And I saw it happen. It happened in Equitable Life. It happened in all sorts of other things. I thought, oh, we've passed our regulatory examination last month, so you can't touch us. And they weren't quite right with my clients, incidentally. I hadn't put them with Equitable Life, but they weren't right with mine. But I knew how to do it. But most people don't know how to do it. So the whole thing is stinky poo. So I just put that in because it's fascinating. The whole thing's fascinating. And I don't think I've changed my mind. And I'm sure you haven't, Alastair, that if you want gold, have it in coins in your lockup, not a bank, or in your tea caddy or something like that, if you really want to be sound. And I think we're heading, I don't want to digress here because I know your time is unbelievably valuable. And you've been kind enough to agree to come on again before you go off to New Orleans for a conference. I think we're living, I can't remember, and like you, we're getting old now, we've been around a bit. I can't remember anything being this bad, potentially.
No. Well, I remember the 70s. I remember politically how bad it was. I mean, I don't know if you remember, but there's a General Walter Walker who was trying to arrange a coup d'etat. Do you remember that? But 1978.
I was approached.
Well, I was sort of approached indirectly, and God Almighty. So yeah, but that politically worse. Economically, no. Economically, this is terrible. But can I come back to the case of your lady? I think that actually shows quite clearly two things. Firstly, the bank actually was probably using AI to flag up warning signals, whatever. So you're not talking about someone rationally looking at this and saying, this woman can afford it, etc., etc. The second point I would make is don't go to a bank to buy your gold. Forget it. So I use I use a reputable dealer when I do that. And of course, the other thing is that I have I think my post is a senior strategic advisor to von Greyerz. So when it comes to high net worth individuals, family offices, institutions, and so on and so forth, we've got alternative, very, very secure vaulting arrangements, completely divorced from the banking system. I think that's clear. And also in Switzerland and also in Singapore. So, you've got to be very careful where you keep your gold. And when it comes to having some gold at home, that does make sense. But you don't want to have the bulk of it at home if you've got a serious amount, simply because security, I think, is a growing issue. And above all, don't tell other people what you've got. I mean, it's bad. Look, it's bad form anyway to discuss money. So don't do it. Not even with your own, trusted friends. You don't talk about these things. For good reason.
Especially not to your wife. Don't talk to your wife about it.
That's, as they say in the police cells, no comment.
Top stuff. For those who want to see the back issues of my interviews with Alastair, they're all on my website. And you'll see posted here how to get, if you want to, Alasdair MacLeod's Substack and stuff. It's all here, and I follow him, and I always learn a lot. So for those of you who are serious players, if you're a serious player, you do well to subscribe. But you'll find most stuff on my website. But between the two of us, I think we cover pretty well much everything that there is. But those last words were words of wisdom. Keep clear of your bank. Especially if your bank is part-owned or potentially part-owned by the scoundrels and gangsters who are in office in this country, and indeed, sadly, the United States now. But once again, Alasdair, thank you so much. Thank you very much indeed. Speak again just before you depart for New Orleans. And for those people who think these conferences, New Orleans, for example, and there are others, if you think that's glamorous, it's glamorous when you're 30. It ain't glamorous when you're the same age as me or Alasdair, I can tell you. It's bloody hard work. And you've got jet lag on top. But there we are, dear boy. Thank you again for coming on, and speak to you again in a month's time.
Thank you very much for having me, Godfrey.
As most of you know, my work is very heavily independently research-based. And I get my information from all over the world. It would help if you press the subscribe button and the little bell next to it, because the more subscribers I have, the more likely it is that international independent research institutes will share their material with me. It's most helpful, and then of course I automatically share it with you. So surprise, won't cost you anything. Thank you very much.